Today, we're talking about one of the biggest questions in the crypto space right now. Why did Bitcoin suddenly crash? When did the decline begin? What triggered it? And did big players exit before the fall? Let's break this down clearly. Bitcoin reached its highest point in October 2025, almost touching $126,000. At that time, confidence was extremely high. People believed Bitcoin would continue rising, and retail investors were entering aggressively. But everything changed after mid-November. The price suddenly reversed. At first, small red candles appeared. Then selling pressure increased. And within a short period, major support levels were broken, and fear took over the market. Within days, Bitcoin lost a huge part of its value, and many investors were shocked and confused. So what really happened? One of the biggest triggers came from the institutional side. Reports confirmed that on November 19th, BlackRock's Bitcoin ETF saw a record withdrawal, more than $500 million in a single day. When a large institution withdraws this much money at once, it creates a strong signal. Retail investors see this movement and panic begins. At the same time, on-chain analytics detected unusual activity from large old wallets, also known as whales. These wallets had been holding Bitcoin for years, and suddenly some of them started moving coins to exchanges and selling parts of their holdings. When whales sell or even show signs of selling, the market reacts. Another big factor was leverage. Crypto exchanges had a high amount of leverage long positions open. When the price began falling, automatic liquidations started. That created a chain reaction. The price dropped, stop losses triggered, more sell orders executed, and the price dropped even further. This turned a correction into a fast crash. Alongside this, global financial conditions were already unstable. Stock markets were under pressure, interest rate uncertainty was rising, and many investors were shifting away from high-risk assets. In situations like this, crypto is usually the first to get affected. Now, the most interesting question: did someone know before the crash? Based on verified information, institutions and large wallets reduced exposure before the crash accelerated. That part is confirmed through ETF withdrawal data and blockchain movements. But there is no confirmed public evidence that any specific influencer, public personality, or individual coordinated selling before the crash. Some people online claim they predicted it, but prediction is different from having direct insider action. So the most realistic conclusion is simple. Big money exited early, and retail investors reacted late. This cycle has repeated many times in Bitcoin's history. When confidence is extremely high, whales quietly take profit. When panic begins, retail investors sell at a loss, while whales wait to buy again. So the real lesson is not fear, the lesson is awareness. The crypto market is driven not only by technology, but also by sentiment, liquidity, and timing. If you understand those three things, you avoid emotional decisions. And now the big question remains: is this just a temporary dip or the start of a longer downtrend? No one can say with certainty, but history shows Bitcoin has crashed many times, and each time it eventually recovered stronger. So now I want to hear from you. Do you believe Bitcoin will bounce back, or is this the beginning of a deeper correction? Share your opinion in the comments.